So the key thing that differentiates real-time payments from other payment rails is the instant, the irrevocable, and the 24/7 nature, running 365 days throughout the year, regardless of bank holiday and weekends. A lot of the RTP schemes that we see across the globe are domestic, but we are continuing to see a move into the cross-border space, especially with the focus of the likes of the G20 talking about and making sure that we're focusing on making cross-border cheaper, faster, more transparent, and more accessible. So why it's an exciting place to be. For me personally, being the EMEA lead for JP Morgan, a lot of my focus to date has been on SEPA Instant and UK faster payments. And seeing the differences between these two markets has been incredibly interesting. And I do find that quite exciting. The UK is the first real-time payment scheme in the world, launched in 2008. And so it's had to do a lot to keep up with the changing market. It's been there through so many changes. 2008, I was able to find out that was the same year that the second generation Apple iPhone was launched. And if you ever Google to look what that looks like, it's looking pretty dated now. This is when you barely had internet on your phone, maybe a G, and definitely before banking apps. And this is where cash was still more than 50% of, 1 in 2 of payments was done in cash. And so you can just seeing alone, comparing the UK faster payments and the journey it's had to be on as the market is been in this change has been very interesting to delve into. And then on the flip side, you've got SEPA Instant, launched late 2017, straight into ISO 20022, so almost at the forefront of instant payment innovation there. But it's had its challenge for uptake, and so it's had its tremendous growth, but it's not at that 100% reachability yet. This will change as we go into this year with the EU legislation. But it's obviously been very interesting to see how SEPA Instant has been being used as a new rail compared to a more legacy UK rail. There's just so much change happening in the payment space on all rails and all markets, but in particular, there is so much focus on real-time payments at the moment. Very exciting, because when I obviously took on this opportunity, didn't foresee I guess the scope of the change that I'd be involved in. So I'm very glad that that's become part of my career and something that I get to see as the markets and regulations, schemes, central banks are all looking to real-time payments to be at the forefront of innovation and changing the payments landscape.
So I think for me, real-time payments, I completely agree with everything that Connie has just said. But if you look at the different types of rails that enable real-time payments, we started off with kind of critical national infrastructure with UK driving faster payments back in 2008. But if you look beyond that, we have launched open banking, which is also an account-to-account payment method that leverages real-time payments. And then we have now also started to look at CBDCs based on blockchain technology and enabling atomic settlement and real-time payments itself. So there's been a lot of advancements in technology and just purely around the rails that support real-time payments. But if you take kind of step back and try and understand what is driving that, if you look at kind of technology as a whole that has been developing in the last couple of decades, it's all tried to drive efficiency, immediacy, and ubiquity on the products and services that we offer to consumers. And payments are at the heart of this. So payments need to be kind of network that enables the supply and demand and the movement of funds. So it becomes really important to have that kind of real-time nature within the fund transfer activity that will that will enable that supply and demand. So that is why we've seen a lot of advancements. And then if you look at what countries are driving this, so Connie mentioned UK as kind of being the pioneers with faster payments, but then we've seen Asia pick up really quickly. So UPI India, quite a big advancement in the Asian market, and that kind of set the kind of precedence for the rest of the region to follow suit. So if you look at Singapore, Malaysia, they followed suit very quickly with their own rails. And then if you look at beyond the Asian market, we've seen Canada kind of making their moves recently with their new payments platform. Australia made the move a while ago with their AP Plus platform, again, national infrastructure that leverages real-time payments. And if you look at US, FedNow has been talking about building out their own ecosystem around real-time payments. And then coming back to Europe, we've had a few hit and misses. So if you look at P27, I think we're still hoping that we find a way to implement some national infrastructure in the Nordics. But if you look at the rest of Europe, we've had EPI looking at kind of enabling a number of payment schemes. And then we've got Target 2 and other payment schemes that are already regionally established. So there's a lot going on in Europe as well around real-time payments.